Good morning and happy Molina Monday. Everyone wants to know, will mortgage rates slow down the housing market and what impact will they have? Now, the short answer is yes, they will slow down the market because the number of people that are interested in purchasing goes down. But the magical question is, will we feel it? And to that, the answer is no. Why? There are three reasons. Number one, let's take a moment to look at the housing market like driving down the highway. Yep, that's right. The real estate highway. Prior to COVID, people were used to driving down the real estate highway at about 40 miles per hour because the average annual return was 4% a year across the nation. Today, people are used to driving down the real estate highway not at 40 miles per hour, but at 120 miles per hour because home values are up 12% across the nation. But the thing is, there's only 1.16 million homes for sale right now in the United States, which is down 20% from a year ago. So you have 20% less inventory today, but statistically, there are 10 million people looking for a home right now. So let me make this very clear. Rates could go up 1% overnight. You could have 20% less people wanting to buy a home, and you would still have 8 people looking to buy a home for every one home for sale. That means real estate values are going to stay high and keep getting higher. But the even better news is that rates are not going to go up 1% overnight. So, will things slow down if rates go up? Yeah. But if you're driving down the real estate highway at 120 miles an hour and now you're driving 90 miles an hour, even though you slowed down by 30 miles per hour, you're still driving more than twice as fast as you ever would have historically. In fact, you're still going to be driving so fast that I guarantee your mother is going to be yelling at you. So buckle up and be grateful. Number two, we are just now realizing the effects of population growth from 30 years ago. This is something you really need to know. Back when Generation X was being created, which is everyone born from 1965 to 1980, there was a significant population decline, and we didn't see that pick up until the millennials. According to Goldman Sachs, you have 80 million baby boomers, 92 million millennials. The baby boomers are generally the parents of the millennials, and only 60 million Generation Xers, which is the generation between the boomers and the millennials. It's a smaller group. So the year is 1965. That begins Generation X. And birth rates begin to really drop. We were in the middle of the Vietnam War, but that's not the reason birth rates dropped. What item was introduced to our society in the year 1965 that may account for the smaller birth rate that led to Generation X? Take a wild guess. Check this out. The birth control pill finally received FDA approval in 1965 and was introduced to society. So, is Generation X a smaller population due to the pill? We don't know because there's no one to ask. You can't respond to the survey, are you not here because of the pill? There's no way to respond to that. But what we do know is that millennials are the largest segment of our population right now. The average age of homeownership is 33 years old. Okay. Those are your beginning millennials. And we are just now starting to see the effect of millennials purchasing. And just so you know, the number of new household creations is also on the rise. Something you may not know, which is really important, is that the next 4 years is going to have a historically explosive growth in the number of people turning 33. So there is super strong demand for housing, and it definitely will be consistent. Number three, 1,000 people are moving to Florida every day. All right. 1,000 people, of which 75% are from the Northeast. Now, most of those people work remote because of the high income taxes and how awful winters are up north. There's a snowball effect of people moving from the Northeast buying down here. I'm one of them. I'm from Connecticut originally. The same thing that's happening in Texas with the increase of engineers and information systems experts is happening in Florida with bankers and day traders. Keep in mind the median income of the hedge funds moving to South Florida is $417,000 per year. The median income in West Palm Beach is $55,000. So it's not just that population is on the rise, income is on the rise, and people with money buy homes. So expect a very strong 5 to 10 years in real estate in South Florida, because if rates went up 1%, they would go up 1% across the nation in New York and in California. So Florida would still be an attractive place to live. So to recap, will higher mortgage rates slow down the housing market? Yes, but the real estate market is still going to be very hot. Why? You have record low inventory. You have an explosion of the number of people turning 33. And according to the census, America is the future. Now, with that being said, give me a call anytime, 561-801-0260. 7-day appraisals, 7-day loan commitments, 2-week closings, not to mention Palm Beach Post voted us the #1 lender in Palm Beach County for 2021. So have an amazing Molina Monday. Go out there, kick ass, and I'll see you soon. Molina out.